Hello and welcome to another installment of Thursday Thoughts. I'm Alex Leonida, Chief Investment Officer of Capital Financial Group. It's been a few weeks since we last met on a Thursday afternoon, and I just wanted to tell you guys that I missed you. We've had quite a few data points come out over the last few weeks, and I dug into those in pretty good detail during the second quarter review. So if you haven't had an opportunity to go look at that, check that out on our YouTube channel. If you guys have any questions or anything that you'd like for me to address in these Thursday Thoughts videos, shoot them over to info@cfgfinancialplanning.com. All right, so a little overview how this goes. If you guys haven't seen this before, first off, we hit some important data releases for the week. Then we do big news stories. I take a question from a client or a friend or whoever sends it in, and then last but not least, and my favorite, is the final thought. So let's get rolling. If you haven't seen this before, we always start with the jobs data because that is, in my view, the most important data considering the circumstances in our economy right now. So check out this chart. This is not so promising. Unemployment subsidies are expiring at the end of the week, and people are still filing for unemployment at a faster rate than they've been getting rehired over the last few weeks. Most pundits were suggesting that people were going to go back to work as these things were expiring, and that's not really what we're seeing right now. We're going to have to see what the data says next week to get a better handle on this, and next Thursday I'm going to dig into this just a little bit deeper after we get a better picture of the trajectory of this job situation. Next up on the list, I should say, you guys, if you saw the Monday Morning Minute, you know this is a light data week, so I don't have a bunch of really good stuff for you, but the ones that I have I think are useful. This is one we haven't really talked about before. It's the KC, or Kansas City Federal Reserve Manufacturing Survey. This survey is actually especially pertinent here to us in Colorado because this is the one that covers our region in the whole Midwest. The data shows an increase of about 3 on the index, which generally on a month-over-month basis is a good number. But per usual, the headline data doesn't really explain what's going on in the economy or in the region. As you dig into the full report, which is this like 10-page PDF that nobody ever actually looks at, I think, but as you dig into that report, it starts to break down kind of how this isn't so rosy. One of the things that we've noted is costs of doing business versus new sales and new orders. If you check out this chart on a year-over-year basis, specifically production, shipments, new orders, pretty much everything is down over 20 handles. That is a lot on a year-over-year basis. The highlighted section at the bottom shows how inflation is starting to creep in to the cost of production and the cost of doing business. As of now, material costs have been able to been offset by raising prices on finished goods, but that's not likely to continue. The high unemployment levels that we've been seeing, and actually on this, I don't know, it's not on this chart, but on another section here, it actually explains the whole breakdown on the work week and how much productivity is being received out of each worker and how long they're working each day. But the work week is actually getting shortened, including, or I guess in addition to, the substantial increase in unemployment numbers. So not a good combo, and macro and micro will both tell you that there's going to be a tipping point on this. If you check out the next chart, this one is very specifically pointed at business costs. And what this is telling us in the simplest form possible is that over 50% of businesses surveyed in the region are reporting an increased cost of doing business relative to a year ago. And this is just not sustainable. Realistically, additional stimulus and dollar weakness is just going to perpetuate this problem. This is something that I touched on just a little bit in the second quarter review video. So once again, if you haven't seen that, go back and check that out. Next up on the list, we have new home sales data. If you just Google it or whatever, the first thing that pops up is the CNBC headline, and that actually says, home sales surged to nearly 21% in June, the highest monthly gain on record. Whoa, That's pretty exciting. Seriously though, I mean, that is a big number. And this is probably why banks are getting more stingy on lending and their mortgage qualifications. But, and I hate to be that guy, but it always seems like there's a but with this data. Check out this chart. I'm just going to leave this here. Okay, so we're still double digits below where we should be relative to last year. I'm not trying to be a negative Nancy or anything. I'm just pointing out that the headlines that guide the average retail investor, the headlines are misleading. And it's my job to inform you guys. So there's the data, unbiased, digging in deep to the PDFs. All right, next up on the list, we do our big news. We've been starting with COVID-related news every single time, so I'm going to stick with that trend just because it's been a little while. I'm not going to spend a ton of time on this today, but here's the bottom line. We have a friggin' ton of new cases on a daily basis. The percentage of positive test results is through the roof. Hospitalizations are increasing, but not at the same pace or same rate as the early stages of the virus. And this is primarily due to the average age of the infected person dropping precipitously. I mean, I guess, young people got to go out and go to their pool parties, right? It's summertime. You know what I'm saying? In any event, the daily death rate is dropping on a percentage basis. Same deal, younger people are getting sick. They're not dying, but they're getting sick and they're spreading it faster. It's just the nature of the beast right now. And that's it for coronavirus news. Next up on the list, we got unemployment benefits. They're set to expire here. Congress is back in session and they're doing Congress-y things, right? You guys know from these videos at this point that Congress is pretty exciting for me to talk about. But regardless, I mean, I don't know what to say about these guys. They're so far apart. We have Democrats on one side, and they actually, I talked about this in our last Thursday Thoughts almost a month ago. They passed a $3 trillion proposal or spending bill earmarked with $1 trillion of money for blue states that are going bankrupt and perpetuating the $600 a month subsidy into 2021, right? So just helicopter money flying from everywhere, free stuff, boom, dollars. On the flip side, we have the Republicans that essentially know that they can't cut off funding. So they're offering a $1 trillion plan that they're negotiating with the White House right now. And this one is interesting because it still has a little bit of money earmarked for municipalities, which is probably necessary, I would guess. But they're only offering a $100 subsidy, and they're offering it for a shorter amount of time to the additional, I guess, for the additional unemployment benefits. The bottom line here is the final number is going to be somewhere between 1 trillion and 3 trillion, right? I don't think it takes a rocket scientist to figure this out. And it's probably going to, the unemployment benefits are going to be somewhere between $100 and $600 a week, and going to be somewhere between a month and 6 months of additional benefits. That's negotiation, right? But yeah, so that's where we're at. I have no idea how this is going to end up, but the market's banking on this being extended and a bunch more money being thrown at the economy. So we're going to track this, and we're going to continue to update you guys on a weekly basis. China hacking, next up on the list, yeah, if you haven't heard about this, apparently China has decided to try to hack our healthcare databases. They're trying to steal, allegedly, right? Steal information on the COVID vaccine. Once again, our brave leaders out there are telling us nothing of substance has been stolen. I mean, while I doubt that, I mean, considering they've stolen money from our most important, or not money, data and intellectual property from our most powerful defense companies, from our most lauded and respected technology companies, I would guess they could hack a biotech firm. But hey, I don't know. In any event, what we're looking at is we're going to see more sanctions. We're going to see more drama. Tensions are going to increase. But it doesn't really change our view on emerging markets because all of that is related to the US dollar strength. And if you guys don't know what I'm talking about, I'm not going to get into it right now. Check out the Q2 video that I keep referencing here because it had a lot more information on those core topics. So next up on the list, we always do a question of the day. There haven't been a ton flying in, so I actually dug into the archives per se, and this is actually a question that I got from a really good friend of mine, and it reads like this. It says, Alex, why do some companies' stock prices go up when they lose money, and other companies' stock prices go down when they are making money? That is an awesome question. It really is. It's an awesome question. And the main driver of this logical fallacy is expectations, right? This is something that we have to manage in all facets of our life, and it absolutely applies to investing. So let's start with the latter part of the question first. Well-established companies, they have a tendency to generate a ton of free cash flow, and they're expected to generate a lot of free cash flow. They're also supposed to have earnings that are really predictable. They're supposed to return money to their shareholders, all these good things like dividends, stock buybacks, whatever. If earnings miss just a little bit, or if stock isn't being bought back, or if dividends aren't being increased, or whatever, any litany of possible things, the stock price is going to go down more than likely, right? There's also a guidance issue, forward-looking guidance, when they kind of predict how much money they're going to make, but a lot of companies are not doing that anymore, so we're not going to dig into that too much. On the flip side, companies that don't really make money, but they're expected to grow in the future, have a whole different set of investors and kind of rules governing whether they're going up and down, okay? It's kind of an interesting scenario. So if one of these companies turns a random profit, or if they start to lose less money unexpectedly, boom, you guessed it, stock goes up, okay? Where this gets a little bit sticky is understanding sales and revenue growth projections relative to net profits and net losses after all expenses are paid. Trying to project these things, and that's where it can kind of get weird, and that's why you see more volatility in these types of companies. And honestly, that's why picking individual stocks is better left to the pros. I mean, because all it really takes is one misstep from a company or their leadership to create a ton of volatility in a short period of time. All right, so it's time for my favorite part of every single one of these videos. It's my final thought. And this one's going to be a little bit different this week. Frankly, I've been avoiding this for quite a while, but I think it's time to kind of jump in and take a stab at it. I'm talking about the great mask debate. So this probably is good timing here in Colorado because Governor Polis just made it mandatory to wear masks whenever you go out in public. Shocking, I know, but there's already a lawsuit suing against this mandate, calling it unconstitutional. Is it unconstitutional? I don't know. Hard to say. I'm not a constitutional lawyer. But what I can tell you is I don't really care if it's unconstitutional or not. To me, it doesn't really matter whether the forefathers thought that our leadership should be able to tell us to wear PPE in public during a pandemic. I mean, I don't even think they knew what that was back then. Is it infringing on our rights? I mean, technically, I guess kind of. But you have to keep it all in perspective. I mean, what I can tell you is logic would suggest that if two folks standing or wearing masks and they're standing relatively far apart and are having a conversation, it is highly unlikely that one person would get the other person sick, okay? I don't think that is like reinventing the wheel or coming up with some unbelievable, earth-shattering new idea. It just seems like that kind of makes sense to me. The other thing is masks cost, I don't know, like 42 cents a piece if you buy them off Amazon. And we're talking, these are the masks that are like 3-ply or 4-ply or even 5-ply. Like they check all the boxes for medical safety precautions, right? And they're dirt cheap, and you can reuse them as long as they don't get wet. And I mean, why would your mask get wet unless you're running a marathon and hacking up into your mask or something? I mean, I don't know, or you catching a rainstorm. I don't know. But I guess what I'm getting at is if we just wear the masks, caseloads are likely to drop, and then the government can stay out of our business. And I mean, literally, like, they're going to reopen bars and they'll start the reopening process again. We just need to see numbers start to go down. So we might as well just do what we can to try to get these daily case numbers down, right? I mean, what's the worst case scenario here? Worst case scenario is the masks don't really work and you're out like 42 cents per mask and, you know, however many dollars you spent on Amazon, and you probably have Amazon somewhere in your portfolio floating out there in an ETF or a mutual fund or even maybe the stock itself, right? So think of it, you know, on the bright side. You're investing in your future if you buy some masks. Not too big of a deal. All right, so that's all I got for you guys this week. Once again, I appreciate you guys taking time out to watch these videos. It means a ton to me. I hope you get something out of them. I enjoy making them, and I try to share the knowledge, try to, I guess, make some light bulbs go off, that not everything you see on TV is really the core essence of what's going on out there. I want you guys to reach out with any questions you may have at info@cfgfinancialplanning.com. And I will look forward to seeing you guys next week. All right. It was great to be back. Cheers. Also, this is not a plug for this type of coffee. I just think it's really good. I like it a lot. It's refreshing. Iced coffee. Good for hot days. Take care, guys.